Okay, hello and welcome everyone to today's session. I'm Jason Gumpert from msdynamicsworld.com, and we are here today for a session on automating sales tax rate returns. I'm joined by Matthew Patrick and Kiel Kopenski. They are regional sales managers at Avalara, and it's great to have them back for part 2 of this 3-part series on sales tax rules that can hurt your business and how automation can help. So as we get started, please know that Kyle and Matt would welcome your feedback and questions during today's event. You can use the Q&A block that you should see to the right of the main presentation window to ask any questions. And if you have any other feedback, feel free to use the chat to let our presenters know what you think. I will, and they will be making time for questions throughout. I know they want to keep this a nice interactive session. So without further delay, please allow me to welcome Matt Patrick to start things off.
Thank you, Jason. And again, we appreciate the opportunity to talk again today to the group about issues around sales and use tax. Today's topic is more specifically around sales and use tax returns and remittance, right? So that lovely section at the end of the month where we all enjoy and getting the state's money back to their coffers. And so for anyone that wasn't with us yesterday, we really covered tax determination, so that, determining the correct tax rates, taxability rules, exempt rules, and of course all of that needs to be done accurately prior to getting to what we're talking about today on the tax compliance side. We will kind of recover or regroup with some items related to that from yesterday just to get anyone up to speed. I always like to kind of talk a little bit about just the overall environment around sales and use tax, why things occur in the way they do, and then we'll kind of talk a little bit about, what are some of the common mistakes in the compliance process, right? So we'll look at each component of the process and certainly look at, what are some things that you should be aware of in terms of looking at how to better manage your own existing process to produce a better result and reduce your audit risk. As you can imagine from a vendor standpoint, Avalara automates this process, and we'll certainly talk about and show you just how does Avalara do that. What does the process look like within our system compared to a manual process? What kind of steps do we eliminate? And like Jason mentioned, we encourage Q&A really throughout the call. So I'll probably pause at different points. I may ask my colleague Kyle to read out a question that's been popped in at that particular portion of the presentation, and we'll go from there. So let's go ahead and jump into it. So, where do states get their money? When you think about sales and use tax as a topic and state budgets, almost 50% of most states, the composition of their budget is made up of sales and use tax. And, when you think about each state and politicians, when they need to raise more revenue, it's not politically correct to raise your income tax, to raise your property tax. It's more visible. It's more challenging from a political perspective to raise those individual tax categories. So what do? What are the trends out there? They look at trying to reinforce the laws that are already on the books for the majority of their tax revenue anyways, which is representing 50% of the revenue. So they're looking at how do we capture more of the tax that we should be collecting, or how do we expand our base of potential tax payers by looking at the way we have our nexus laws in the states, or how do we tax certain products or services, more commonly even services today? How do we look at maybe possibly taxing services when we previously did? So that's what the states are doing. They're looking at hiring auditors. I think Pennsylvania hired auditors. They were really focused after companies that weren't reporting use tax correctly and identifying those that really should be and capturing that money that previously was just left uncollected. When you look at what was the numbers there from a few years ago, if you just look at online sales collectively throughout the states, they were missing out on approximately $24 billion. And when the collective states have a $123 million or billion-dollar budget deficit, states are looking at, certainly closing that gap, right? And if you have a kid in school and if they go to a state school, you probably notice tuition keeps going up in many states. They're just not getting the funding. So again, it's all working together. The states are looking at how do we, again, manage our budget and how do we raise taxes more efficiently. And sales and use tax continues to be more and more a focus for many states. So as it relates to tax returns, what are some of the common areas that we're going to address today, right? So there's, with anything tax related, what's the known quantity? Everything changes, right? So each state has different ways they have filing deadlines, they have different ways of payment methods, they have different nexus rules. One state will treat this as a trigger that you need to register in their state, while another state doesn't care about that, care about something else. And then once you get there in terms of your own data, depending on your current environment, you may have one source of data, you may have multiple systems, may have multiple systems that have different ways they calculate tax, and you got to consolidate that information into an actual tax return and get it to, and remit payment off to the state. And then from an audit perspective, everything that you do leading up to this point has to be defendable in an audit. So how do you produce that process and be able to recall to support your transactions, right? So at its highest level, these are the challenges at its basic end with sales tax, and we'll kind of drill into each component in a little bit further detail as we go along. Oftentimes questions I get, just give you context on my background. I've been in tax for over 10 years. I've been here at Avalara for 4.5, and we get a lot of common questions. Oftentimes questions we get from customers are, well, how do they find us in an audit? And from a tax compliance or return perspective, these are some common areas that we see over and over again on how companies are getting kind of picked for audits. There's several other audit triggers that aren't really on this list that maybe aren't tax return specific, but from a tax return specific area, these are what to look out for. And then again, for any Pennsylvania customers, they're not reporting use tax. If you haven't been, you might be on their list, because that seems to be a pretty common target. We've been getting a lot of calls from companies in that state. So why should you care, right? Obviously, reporting tax accurately, getting it done correctly on the tax return, remitting it correctly and on time, it shows that you have a good process in place. And when you're late, when you're not doing it accurately, what happens is it raises that audit trigger, and then it creates these challenges, right? So this is a study done by Wakefield Research back in 2013. It's just talking a little bit about, what do your peers feel about audits and what are the results that they get? And, for small to mid-sized businesses, you have the time length of how long it's taking to deal with it, and you have the likelihood of finding mistakes, and then you have the end result, obviously, of what's the total cost, both in the assessment, the penalties, and internal time, and really managing that audit. And then, unfortunately, when you have these types of processes, usually the auditor is going to kind of mark the list to say, I'm coming back, because if they see material weaknesses in your process, there's an opportunity to come back and certainly find an assessment to see if you've cleaned it up again next year or 3 years, whatever the frequency might be. So the common remittance pain points that we're going to kind of drill into, these are the ones that should be on your mind all the time, right? So it's, that monthly filing calendar. So if you don't have an Excel spreadsheet with all of the pertinent details of tracking your tax return compliance, after we get off the call, you should really start considering how to manage that, how to pull that data together in one place to really track it correctly. Filing local returns. So for many of us that may not have to deal with it, you probably wonder what I'm talking about. So I live in Ohio, but if you live out west and you have to deal with Colorado or Arizona, you know very well what I'm talking about, which is, state and local requirements can differ. And in the state of Colorado, you're going to have a local filing presence, and you're going to have a state filing presence with different nuances to each component of that. Payment methods. So, as you enter these additional states, you're going to see some states are going to want it done ACH or check, or in other states, they might not, or local. So locals might not have the technology to accept some of the electronic processes that we would all most likely prefer. But it's just managing that process and method of payment correctly that we see some issues with. And then the lovely managing notice management, kind of a play on words, but the love letters that we get from each state government and saying that, hey, maybe we made a mistake and we can't figure it out. We're asking for your help, or we noticed that this or that happened, or you're changing your frequency, whatever it is. Just managing that notice from the state and making sure they're being addressed. on a month-to-month basis are really some of the common issues or pain points that we see from a compliance perspective. So to drill into local returns a bit, again, each state has its own set of rules and regulations. Some of these states, they can even from a taxability standpoint, and we'll kind of talk about that a little bit too, but like in Colorado, I want to say it's web-based software, a local community can tax that as a taxable transaction where the state might exempt it. So not only is it just in the filing frequencies, it can be in some very nuanced situations just in how the product or service is taxed that, that can apply to your transaction and to your business. So local reporting, local filing, local rules, certainly good to be aware of and to maintain and have cognizance and awareness around it. This one's probably the most important, I would say, right? It's really that filing calendar that, again, if you don't have it set up today, you really should be considering it, right? So what do I mean by the filing calendar? It's that Excel spreadsheet that should say, here's all the tax returns we have due, what returns they are, what due dates are for those returns, and not just that, but what's the prepayment requirements, right? So some states like Missouri or Illinois, they might ask, depending on the threshold of sales in that state, if you're large enough, they want weekly prepayments, whereas other states might just want the prepayment along with the tax return. So understanding those nuances, really important in helping to track it, manage it, and then where do you go to certainly file the returns. All that in one organized fashion. As we see the challenges there are when it's not tracked accurately or it's just tribal knowledge per se. If someone had a death in the family, for whatever reason, they can't get in at the time of the month most of the returns are due. Someone coming behind them is having a much more difficult time to manage getting tax returns out the door, which just results in late fees and penalties on the returns. So again, the changing of those filing methods, as you do more sales in a state, it's going to change the frequency of it, and just who's managing that within the business, who's understanding how to document it from a process standpoint. So again, that not just one person in the business can really just manage that one portion of the filing compliance process. Different payment methods. So, as you can imagine, each state, if you're doing a lot of business in that state, they want their money and they want their money now, right? So they want immediate access to the money, and they're going to ask you or force you to do ACH or an electronic check. If you send a check, it's important to know, and we see it many times with some disjointed processes, is if you're not following that process and you're sending a check, the check, just because it gets there, it doesn't necessarily mean it's being applied on time and to the correct account if it's not fully documented correctly. So what happens is that the check might get there that day, but it doesn't get applied, and it's really applied late, and then you're getting assessed late fees and penalties and getting notices. So again, it's very important to understand and keep on the radar of not only what states you're in, but what states could be moving to that electronic process, so you're monitoring it and having a good understanding of, we need to change our payment processes for those particular jurisdictions. So Kyle, I'll pause for a moment, and if there's any questions from anyone out in the audience today on just those first couple components, I'd love to hear any feedback, or I'll move on to the next piece.
So far, there aren't any questions yet.
Okay.
I'll let you know if and when they come in.
Perfect. So managing tax notices, or the love letters, right, from each jurisdiction, once your return's filed, a lot of folks just kind of think, especially if they haven't done this for a while, my job's done, I'm good. I don't really need to think much about anything else. Or I just had a conversation recently with a gentleman that had taken over for another person at a company, and when they came in, they didn't realize it, but all the tax notices went to one email. So 4 months later, he was just catching up to all the tax notices that were coming in through this one email account. And, the person never really obviously told him these are where they were, because they were never getting addressed for quite a long time. So I can imagine it was a mess to clean up. So having good processes in place to document, understand what notices are coming in, what methods or formats are they coming in? Do they send them electronically? Are they through paper? Organizing that information so everything's getting properly addressed on time is really important. It must be done, as you can imagine, month to month as you process tax returns. And that's why, from a best-in-class perspective, as you look at these different components, automation is it's important because the biggest challenge with tax returns is the consistency of the data. It's a lot of data, it's a lot of transactions, and getting it all correct, number one, is a challenge. So automating the workflow from when transactions flow through your financials or through e-commerce or through other systems, getting a consistent tax decision, how that flows through to your tax reporting, centralizing that tax information so you're not having to take 3 different systems of tax data and bringing it together to then reformat that data for a California return versus a Colorado return versus a Michigan return. And then from a standardization perspective, how do you store your tax returns? How do you store the documentation or your support of those tax returns, your exemption certificates, things to support your transactions and your established procedures so that when you're asked to defend the transactions or defend anything in an audit, you're really prepared to go to one place to respond to the auditor's request and support each transaction and document that you have that supports your tax return. So again, to go a little bit further, common mistakes that we see is not knowing where to file. Nexus is it's the biggest tax exposure area for any business, and that's again where you should be registered, but you're not because you just weren't aware that certain activities in your business really compel you to register and be an agent upon the state, on behalf of the state, to charge and collect tax in that state and remit it. Using wrong forms, poor registration, not understanding the registration process, we certainly see that quite a bit. Some registration in some states is pretty straightforward, others not so much. Filing late, that's just it's a symptom of challenging processes internally, turnover, and it can be an audit flag. So certainly looking at filing late, not just in the fact that you have penalties and interest, but what the end result can be as to filing late and how that kind of raises the trigger to an auditor to say, hey, you know what, they filed late 3 times this year. Maybe we should go in and take a look and see if we can, quote unquote, help them. Remittance errors. Just doing, things not footing back to total sales, total gross sales, not reconciling properly. And what things are bottlenecking the process, obviously. So not knowing where to file Nexus, and again, for anyone not familiar, Nexus is traditionally thought from a sales tax perspective of, a physical presence in a state. So you're thinking like a building, a warehouse, you hired an employee and they work from home in that state. More and more, but not always found in terms of the company understanding that they have a responsibility there. But as Nexus laws are changing, you think of kind of initially looking at the state budgets. They're looking at different ways to expand their customer base. Expanding the customer base for a state is how can we get more out-of-state companies to register in our state to charge and collect tax, right? And so they might be looking at changing, or you'll see some states have laws that, hey, you know what, if you use an independent contractor in our state, you're creating a market, thus you have a physical presence here. Go ahead and get registered, charge and collect taxes in our particular state. Or, maybe you sell through Amazon and your company-owned inventory is sitting in a warehouse of Amazon or another third-party warehouse. Well, you know what? That's creating a connection between your company and our state. We want you to register. So there's a variety of different things that states are doing. More recently, I think it's South Dakota, they're trying to pass a law, and it's being fought around really more of an economic presence around Nexus, saying, if you do 200 invoices and 100,000 in sales, we say you generally have economic presence here, and we want you to register, collect, and charge taxes. So in other states are looking at that because, again, when you look at the budget shortfalls and the tax money that they're not being able to collect remotely on many of the sales, they're going and they're looking at different ways to do that. So what it means for customers or for you is if you don't recognize that you should have been registered, as a state, if they send you an audit notice, you might be open to multiple years of tax, and it may be challenging to go back to your customers for that multiple years of tax to help them kind of pay their fair share of the tax So if you may be stuck with several thousand or hundreds of thousands of dollars in tax. Other things that can happen, we'll talk about taxability. We talked a little bit about it earlier in terms of a customer maybe local in Denver having a different tax rules in the state. If you're in these kind of industries, you'll see a lot of state-by-state differences and just managing that. So once you do register, it's not just done there. It's just making sure you've done the tax research to understand how products and services can be taxed differently from state to state, and how your tax laws really affect that, or your product affects that on a per state basis. So, Kyle, did I see a question pop through there?
Nope, I don't see any questions.
Okay. Let's see. So obviously there's ever-changing rules. Avalara does offer some updates, some high-level information about changing rules on a state-by-state basis. You may want to check out our website for salestax.avalara.com. Just a nice free way to get an idea of some alerts, things going on in jurisdictions that you may be registered in. Failing to register. All right, so after verifying Nexus, you must file and remit tax accurately and on time, right? That's pretty obvious. But once you're registered, I mean, you're really going to want to evaluate, again, all of the different processes that you put in place, making sure you have your filing calendar set up right. If you're registering with, for those that are familiar with streamlined sales tax, it's all done on one form, but if you're a company in a certain industry that has multiple tax types, it's important to know that that one form may not apply to those additional tax types, and you may have some additional work to do. We see some issues or areas of just not understanding that they have additional paperwork to use on the streamlined sales tax piece. Using the wrong forms or formats. This really, again, just goes back to understanding is the state wanting us to e-file versus a paper return versus EDI? It's funny. We see some customers that don't understand that when the state's asking you to do it in this format, there's a reason why they do it. And then when you don't, you send it in paper, it causes delays, problems, and late payments and issues. So just really follow the right formats, and it'll get you there. It's just it's just again tracking that in your calendar and what formats the state prefers, and making sure you're prepared to do so, both from a filing perspective and a payment perspective. Let's see. So filing late. Again, that kind of follows the same triggers. Prepayment. So here's the thing that we see with filing late. So when you think about even your own filing schedule, everyone thinks about all the tax returns due on the 20th, but they kind of forget about the things that might be before the 20th or after the 20th, and just when those deadlines occur and the nature of prepayment. So especially for anyone that may be taking over for someone that previously have done it, when they left the company, or maybe they got promoted but they're in a different division, whatever it is, but they're kind of managing this initially for the first time. Just, again, be very aware of not just the 20th of the month, but what activities, what things are due prior to that, and how are they being tracked? Are they tracked well so that you can manage them efficiently, so that you're not filing late? Because filing late, again, is not just filing late in penalties and interest. It can be that trigger that raises the flag to a state that says, all right, you know what, you filed late once in the last 2 years. That's a lot different. And honestly, you can call the state, and you might have an opportunity to get them to drop the penalties because they've seen you've been a good payer on time every time. You just had a situation that came up. But if you're filing late 3 or 4 times in a month, or in a year, that's a completely different message. And again, it can cause an audit trigger for a state to come in and again, help you with looking at your tax processes. So remittance errors, this really goes down to the fundamentals, right, in terms of reconciliation. So reconciling properly with your records and your sales tax payable account, making sure that, again, when an auditor comes in and is trying to tie out your records, that things tie back. It's certainly important to make sure that what's going on the tax return is being processed accurately on the other side. So what are some of the roadblocks? it's all those things, right? So when you go to automate the process, and again, it's no secret, Avalara is a tax automation company, we help to really automate both the pieces that lead up to the tax return, but also the components to completing and filing the tax returns on time. So it's really about, reducing audit risk, reducing a lot of the manual things that you have to maintain today in order for this process to get automated, whether it's the filing calendar, prepayments, and then the tax return filings themselves. So best practices, these are the things that should always be on your mind. Knowing where you have nexus is key number one. Each month, each quarter, each year, just having an understanding of what activities could be creating a reason to register in other states can certainly, help in making sure you're not creating a substantial exposure. As well as, once you do, or as you look at your current states, has anything changed with product or service taxability? And what tools are we using to get the rates, et cetera? From an Avalara perspective, if you're here with us yesterday, we talked on the left-hand side here, AvaTax Calc, the tax determination component. That is, of course, the core component that then leads up to, on the right-hand side, the compliance piece. Cert Capture will kind of cover a little bit tomorrow in terms of how to better manage those exemption certificates to support your sales and support your audits. But, we'll cover in a moment here in a presentation on Dynamics GP and the tax engine a little bit about Avalara Calc from yesterday's, because it logically flows into how does data get into the tax return process. So Avalara at a high level, we're a web-based software. All the tax rates and rules are managed by a team of 200 professionals here at Avalara to keep them up to date. And then from how our systems talk together, so we have integrations to GP, AX, or many other financial systems. That connector, really what it's doing is it's just sending us the data we need to make a tax determination and producing the result back into your process, whether it's a quote, an order, or an invoice. It's as simple as that. When it's a posted invoice, it's a recordable transaction. It's showing up in our reports that you can then reconcile back to your financials. And, of course, that get built into our liability worksheet, or basically our workflow to file tax returns on your behalf. From a technology standpoint, we take, obviously we have thousands of customers. Gosh, we have over 20,000 customers today. We're aiming at 98%, because once you hand this process off to someone else, not too many are asking for it back. And, from overall technology, why we're efficient at it is we have some great tools in the background at Avalara. They really help aggregate information properly, put it into the right form, and then get it into the tax, get it onto the forms correctly. And then from a maintenance and treasury perspective, we have some tools there. So it just helps streamline the process for us, which then we, of course, pass along that to our customers. So I think what you'll see when we go into the software, and you look at these 5 categories of getting the information, meaning getting your data, getting it consolidated, to moving it to the spreadsheet, to start thinking about formatting it to the tax return, right, to then entering it on the tax return. If you look at all the gray components, that's what our tax automation is really going to eliminate for you. And then the white components are still the things that you need to do that you're responsible for in terms of filing the tax return. So reconciliation, obviously, key number 1, entering the prepayment information and approving the voucher. We're really taking all these other components off your plate to better and more efficiently manage sales and use tax. So let's go ahead and get into software here for a moment. And Kyle, you know what? I was thinking about, do you want to go ahead and show Dynamics GP, and then I'll jump into the tax engine?
Yeah, let's do it. I have mine up and ready.
You're getting a baton, my friend.
All right. Share my screen, under 2. So go ahead and let me know when you can see my screen.
Looks good.
Okay, great. Okay, so in GP, what I want to look at today are 3 main functions. I want to show how we're setting the tax schedule ID on the customer card to AvaTax. I want to walk through a sales transaction. and then I'll signify how we're doing item taxability, understanding on a per item level if it's taxable, if it's not, because we have all that 50 state research behind everything. So the first thing I have here is the customer maintenance card, and as you can see, so typically what you would be doing and maintaining is, for every new customer, you create a new tax schedule for them. You have to research based on the shipping details what the correct tax rate would be, and then maintain that, periodically. Typically, you want to do it monthly. With Avalara, those days are gone. You're just going to set your tax schedules to AvaTax. So I have it set here on the ship to address. I also have it set to AvaTax here. So once you do that, there's no maintenance for you ever again. As Matt said, it's all maintained up in the cloud. Okay? So let me go do a sample transaction. So I have an invoice built out. I'm using that same customer that we had over here on the customer card. And what you're going to want to watch is you're going to want to look down here where it says tax when I calculate, and then you'll see a box that's reaching out to the tax engine. So let me change this to a different value. Let's add a couple more items just to make it nice. And so what we're going to do is I'm going to go to additional, and we'll calculate tax. So keep an eye right over here. So with that, it just reached out to the tax engine based on the ship to and ship from details of this invoice and what you're selling. It made the tax determination, put it back on your invoice. So now that when you save it and commit it, you have the correct sales tax to accrue, and it carries over to the tax engine for reporting. The last thing I want to show in GP is how to map your specific products and services at the item level to our specific tax codes. So if you want to go by group, you can do that, or you can do it by individual items. And what you're going to see is there's a field added here called Taxability. And so what you will do is you would just map our tax codes to your groups and items. And so from there, we're going to understand how it's taxed from one place to the next based on the rules that are set in place at the time of invoicing. So this P with 7 zeros, that's just default to tangible personal property, but we have thousands of tax codes that you can apply to this. As you can see here, it's really going, it's going to take a lot away from the workflow of managing this and appointing tax tasks to order processing, trying to put the burden on their shoulders. You're kind of removing all the human touch and human error from this process. So Matt, with that, can I send it back over?
Yeah, absolutely.
Is there anything that you want to add?
No, I think that was the gist of it. I mean, I know some folks certainly were here yesterday, probably saw a little bit more, but ultimately, you're not having to manage the rate tables. You're not having to build rules into Dynamics GP for state-by-state differences in your products and services. We didn't cover on it much here, but if you have large customers with multi-state exemptions and you're thinking of order entry, do they understand if the certificate is up to date in that state? Are you reportable in that state or not? Are they exempt in that state but not another? Our certificate management product help close that loop as well as part of the process.
Yeah, I should have touched on that a little bit more, but our certificate manager, and we'll go in more detail tomorrow for the exemption presentation, but we're able to recognize which customers are tax exempt and which ones are not. So if we do find ourselves selling to a tax exempt customer, well, it's still a reportable sale, so we still need to capture that information, even though we're doing a zero tax calculation, which we will be able to do. So I'm going to send it over to you, Matt.
Yeah, go ahead and send it back.
There you go. Oh, I have a question. So it says, if you have sales tax nexus, are you then required to file business taxes as well?
Well, it's the favorite answer in the tax world is it depends. So I think anytime you're looking at registration, and I'm glad the question was brought up because sometimes you think of there's sales tax nexus, there's income tax nexus law. It's two separate things, but it's important to know the differences. And on the income tax side, yeah, certainly you may have a need to address, business license, income tax obligations in the state, differently than sales tax. So it's not just a sales tax thing. It is a combination of income tax, franchise tax, and the whole gambit at times when you go and have to enter these states. But it just kind of depends. So, yeah, I guess just to transition, we moved over to Avatax, or the tax engine itself. And again, I like to think of this as this is where you go to define your tax policy as a company. So, in an ideal world, why you do this type of project is you want to take tax decisions out of your hands of order entry, customer service, salespeople. Those folks involved that don't understand, they shouldn't have the responsibility to manage tax in the financials, and you just want to say for them, place Avatax on the customer or the ship to, and let the tax policy here that we define in the tax engine execute so that we get accurate numbers that flow through to a tax return. And when you first log into this product, it's giving you kind of a dashboard of information, certainly providing you updates as to what we're doing to the database. Some folks want to know what boundaries have changed, what rates have changed, what tax rules have changed. They can see, what changes on a month-by-month basis that we're doing for our customers. But to give you some context of tax reporting, it's important to understand, what's the setup kind of like. If you're a single reporting entity, it's different than a multiple reporting entity. Or if you're a single reporting entity with multiple divisions that roll up to one company, we have all options for you. The main goal, of course, is you want to be able to take all sources of data, meaning if it's coming from the financials, an e-commerce system, or other applications, so that it all gets aggregated into its proper tax ID or reporting entity, and each reporting entity is appropriately attached to its reporting responsibility and where you need to charge tax. So there's a nexus selection for each reporting entity, and that's where you go to really trigger that you have that responsibility to charge and collect tax in that particular state. It's easy as checking a box on a particular state, and you can activate all of the tax rules, tax rates, and the tax reporting just in that click of a box versus, if you enter California, there's probably 150 tax rates you would have to build just to get the tax rate set up and the taxability rules on your line items for configuration, whereas it's just a check of the box here in Avatax. Once you have your entity set up, transactions are going to be flowing through, as invoices are processed. So as you capture invoices, they'll come through, and just to kind of give you an idea of some of the data that's captured that will then flow through to our tax reporting and a tax return, I'll pull one particular invoice here. Let's see. Let's go ahead and look at maybe this one here in Arizona. So this is an invoice originating from the state of Washington into Phoenix. And, when you look at the individual line items, it's breaking out these individual taxing jurisdictions. So when you think about, especially states where you have state and local reporting, they want the format in a particular way, and oftentimes when you're getting it out of your financials, you're bringing it to Excel to kind of massage it to the right format to get it to a tax return. What you'll see here in a moment is you no longer have to do that. We're capturing the proper buckets easily and just as part of the sale. And it all flows through to the tax reporting. And you also see things like our tax content, applying any kind of different tax decision for that type of product or service. So installation, for example, in Arizona, using that tax code is producing a non-taxable result, whereas, traditionally it's taxable in another state or vice versa. So again, just applying those rules, providing good documentation. This, from an audit perspective, as you can imagine, having this level of detail in your transactions just makes life a lot easier in trying to pull that information to prepare for an audit and provide to an auditor. So we had mentioned when you're thinking about, that flow chart of tax reporting, kind of that last slide we looked at prior to going into Dynamics GP, it was kind of showing those 5 categories of getting, organizing the data, preparing it for formatting it, doing all this sequence of steps. So, from a reconciliation standpoint in Avatax, one of the things that you would do is certainly run a top-line report to indicate or capture, do I have all the transactions I would expect for the given time frame? So I'm going to go run this report. It'll probably show just a few transactions for that short time frame of 1 month here in our demo database. But in this case, it's easy to see, did I produce 14 invoices for that time period of my financials? Do total sales, total exempt, and taxable sales, does it all kind of match up from a summary level, which the summary reports are usually pretty easy to run in your financials. And then you can drill down into the register. Document code is really your invoice number coming out of your financials, again, whether it's AXNAV or other systems. So you can get into the granular level detail pretty quickly. If I went one level further, it would go to the actual invoice with the line items on the invoice and the amounts of the tax or the jurisdiction amounts. So from a reconciliation perspective, it's very straightforward. You can drop all this out into 6 different formats. But from a review of just overall tax reporting, we'll take a look at some tax reports. I kind of like to use this summary report mainly because it just gives you a good high-level overview of each state at summary level. And we'll open this up. So you'll see each state by state going down the left here, and then total sales, total sellers use, and total combined sales. And then you can drill right into the different states or counties and cities. So if you wanted to go into Arizona and start looking at or trying to track down something in a particular county, you can get to every invoice that hit this particular county in a matter of 2 or 3 mouse clicks, and you'll see, invoice number, line items on each invoice for that defined time frame quite quickly. So all these reports, they fall into our tax return remittance process. We refer to it as our liability worksheet, but think of it as the combination of where you go to provide the workflow for your filing calendar, for the approval for AvaTax, to file tax returns on your behalf. Hey, Kyle, I'm losing my mind here. What date was that again that built the liability worksheet?
August 2009.
9.
Almost had it. There you go.
Almost had it. So at the beginning of each month, what we would ask you to do is we need you to reconcile your AvaTax records with your financials, and then you need to go into this liability worksheet and to really approve the amounts that we need to file on your behalf. And we need you to do that by the 10th of the month for the purpose of, Avalara needs to file on time, and if we don't file on time, we assume the penalties and interest. So let's just walk through this liability worksheet here briefly. So when I'm scrolling down, you'll see, each state form, when you expand it, it'll have some additional information, but part of this is really your filing calendar, because you're going to have all of the types of forms that you're filing, the frequency of those forms, the prepayments. In this case, we're doing the quarterly accrual calculation for you automatically. And then if you remember those white spots in that workflow presentation, in the last slide, you have a couple, there's really 3 main activities. Prepayments, any adjustments, anything that you need to make the return right, you can adjust here and then approve the amount. And what's nice about this is, for anyone that's currently filing tax returns, you can understand that the California return is a lot different than doing some other returns. How you get the data in what format to then get it to the California return can, again, cause challenges. So from someone coming behind you, when you're using this process, they just have to understand how to reconcile our records to your records using the reconciliation reports, because they don't have to know all those other areas of where does this number go in the tax return, how do I get that number, because it's not exactly coming right out of the financials in the format that I need. So they're not having to know all those nuances. They just really need to know the process of reconciliation and adjustments so that Avalara can take the baton and file it on their behalf. So logistically, what we do is we take this 18198 ACH debit or credit out of your system, and then we go into the individual jurisdictions using your existing e-file logins, or if it's a paper return, we'll file the paper return. And then we'll fill out the tax return and remit payment on your behalf. And once we do, we'll post copies of those tax returns in an Excel document of all the ACH payments we made on your behalf in one place. So this is kind of nice because, again, if you're currently doing this, if you're in 2 or 3 states, hey, look, not that big of a deal. But if you're in 20 and 30 states, you're probably having to kind of go back into these websites and make sure you're downloading the return once it's complete, so that you can store it with your records and have all your other tax documentation that support the return together. Whereas here, you can come in here once a month, check the box to download all the documents, and just bring it in with all the PDFs and the payments that you made, and you got everything that you need just within one mouse click. So from an overall perspective, this is the main compliance portion of our product. From a tax notice standpoint, we certainly talked about tax notices. We help and work with customers on completing tax notices. Obviously, we rely upon our customers to make sure they're notifying us of all the tax notices they're receiving. You can communicate with us through our tax notice system here, and then we'll work to resolve those tax notices on your behalf. So with that, I again want to just open it up for additional questions. Certainly we can kind of go and cover anything additional in the software itself or other compliance questions that you may have experienced in the past.
So I don't see any new questions yet.
What can I say? I'm thorough, Kyle.
You are, man. You really are. Well, if anything does pop up, I'll be sure to interject and let you know.
I did see a question around, do we have this lecture in a PDF? I can certainly convert this into a PDF and send it over to Jason. He can distribute it out to everyone in the group.
Yeah, we'd be happy to do that. And obviously, if anyone thinks of any questions after the event, don't hesitate to reach out.
Absolutely. Please do. Let me go ahead and get my contact information here on the screen. So please feel free to reach out directly to me, Jason, Kyle, any one of us. We'll certainly, if we can't answer your questions directly, we'll get you in contact with some other folks here at Avalara, or Jason will pass you obviously over to us. But we love to talk tax. We're kind of crazy that way. It's our favorite subject, and if we can help you, all the better.
All right. Well, shall we wrap it up there, Matt?
I think so.
Great. Well, we did record today's event, and there is a question on how you can replay this demo. We'll be making that recording available to everyone in the audience with an email update when that is ready. So that would be a way to review this later. With that, we will conclude today's event. Have a great day, everyone.
Thank you.